Now we're good.
Yeah, always got to remember to do that. That would be a pain.
Jeez. Yes, I would.
So
This is
anyway,
why you have friends.
yeah.
Always got to have backup.
Absolutely.
So Hoag and I will be here. We might pop up at some point, but I think for now we'll probably get out of the way and let you do your thing, Jared.
Yeah, ready to rock and roll.
All right.
Yeah, appreciate the intro as always, guys. Happy to be here and happy to be answering a lot of your questions. I will say kind of out of the gate that the flavor of a lot of the questions that came in told me that you all are not familiar with my system, which is totally fine. There's no sense of criticism by any means. But what that does is it gives me maybe a little bit of license to kind of go out of the gate and say a few things about it, because my approach to trading psychology is different than others. It comes from a slant that has kind of proven itself in poker and in golf and in esports and other professions. And so it's not trading specific, although I've spent nearly a decade working with traders, some institutional ones and many independent retail traders like yourselves. So my system works off of some kind of fundamental principles of how the brain operates, how we approach performance. And if you understand those basic principles, that alone sometimes can change the way you begin problem solving, the way you're able to actually address the revenge trading, the FOMO, the discipline issues. That's I think one of the biggest problems that I see, frankly, right? It's not that you have all those individual problems, it's how you're even thinking about those problems that is the bigger issue. So yeah, I think I want to start there. So I'm going to share my screen and just give you a little bit of a flavor of my system first. And then what that's going to do is save us quite a bit of time as we kind of go through some of the questions, so I'm not kind of repeating myself again and again. Now, this is a worksheet that's freely available on my website. And what it does is it just kind of walks you through the steps of my system and give you some examples of where to find this in the book. Okay, so the first step in my program is what I call mapping your pattern. Okay, and there are some very clear questions that this step helps to answer. Okay, so mapping your pattern basically means that you're using your skills as a trader to understand patterning in the market, but you're just kind of putting a mirror on yourself and understanding the patterning that exists in your FOMO, in your revenge trading, in your confidence issues, because they exist. But so many of you don't take the time to actually write down what that looks like and map it so that you can see it in real time. Because if you are able to see it in real time, right, then you have the opportunity to stop something, right? You cannot stop something you cannot see. And the problem is that so many of you don't begin seeing the problem until it's too big and the mind is already compromised and unable to kind of function properly. Now, once you've mapped your pattern, it's going to give you some indications of what the causality could be, okay? And identifying the root of the problem is really, really important, okay? You do not want to be controlling your emotions. There are some questions that came through that had to do with that, right? I'm able to control my, I'll actually read one. Where is it? I've been with Topstep since January. I've been really learning to control my emotions. However, I still have that blow up day. Any words of wisdom? Yes, because controlling your emotions is not really the solution that we're after. Controlling your emotions is a short-term tactic while you are figuring out the root cause of the problem. It's kind of like putting, a Band-Aid or a cast on, an injury. But, the Band-Aid would be on something that needs stitches, and the cast would be temporary because, we just need to immobilize it. We don't really even understand kind of what's going on yet. So it's a short-term tactic for you to figure out what the cause is. And this is challenging, okay? But the book is kind of laid out in a way that helps you to do that. And I'll give you some guidance on some ideas that can be down there. But another way to kind of think about the root problem is, imagine walking down the street and having a rock in your shoe. So the rock is causing pain. The pain becomes the signal that tells you there's a rock in your shoe. Now, is the signal of pain the problem, or is it the rock? The answer is obvious. Now, the pain points that you experience are the emotions, the FOMO, the revenge, the overconfidence, the greed. Those are the pain signals, right? So you map those pain signals, and then we work to identify the actual causality. And from an emotional standpoint, it can be expecting to make money every day, right? That's an example of a rock, right? A flaw in the back of your mind. And when that flaw reacts on a losing day, it's going to cause anger. It's going to cause revenge trading. So the revenge trading is not the problem. The anger is not the problem. The problem is that you are expecting yourself to make money today. And that expectation, is obviously not realistic. So that's what you're correcting. And when we develop this real-time strategy, right? The real-time strategy is designed to battle against that emotional reaction so that you're not making mistakes, but you're battling with the right logic. You're not trying to correct the emotion. You're trying to correct the causality of it. So what you might say to yourself in that moment would be, all right, I cannot expect to make money every day. That's impossible. What am I really trying to do here? I'm trying to trade my system as perfectly as I possibly can. And even though it's tough, that's where I gain a lot of strength, just like being in the gym, right? You're lifting weights that you can do easily. You're not building muscle. You're lifting weights that are challenging, right? And cause you to kind of fatigue at the end. That is where you build muscle. So if you want to build mental muscle, you need the right logic applied in the moment with force. And then, if you start to get fatigued, take breaks. So many traders just are so focused on trading and not able to kind of pull themselves away that they effectively put themselves in a position for a mental injury, right? If I just keep bench pressing, eventually I'm either going to get injured or I'm going to fail so entirely that the bar is going to end up choking me. Okay, so we want to avoid those situations. But again, if you can't see that that's what's happening, you're not going to be able to do that. Okay, so I'm going to get to your questions now, but hopefully that gives you a little bit of perspective as we begin to kind of dig in here. All right, so first question, how do I recognize in order to stop or prevent the trigger that starts revenge trading? I've gone on tilt 2 times in the past month and a flood of emotions overwhelmed me. I actually started recording myself on the last few trades to review afterwards. It was incredibly stupid in hindsight, but in the moment I was helpless. So what's happening here is there is not a clear understanding of the escalation of that emotion, right? How do you stop and prevent the trigger? Okay, the trigger is, right, the thing that sets you off. That's not really where we want to start. Those triggers take a lot longer to deactivate, right? It's not something that happens instantaneously. What we want is to you certainly can know what those triggers are. So when they happen, even if you don't feel a lot of anger, that it's probably going to start building in the background, and you can begin applying that correction, applying that logic, or taking action before the emotion gets too big. Okay. Part 2 here is I've gone on tilt 2 times in a row and then a flood of emotions overwhelmed me. Okay. And so you are going to do things that are stupid in that moment, not because you are stupid, but because the emotion has the power to shut down higher brain function. Okay. This is, I said at the outset, we're going to go over some fundamental principles. This is, I think, the most important one. If you remember this, tattoo it to the inside of your brain, and believe me, it applies anywhere in life, not just in trading. Okay. When the emotional system becomes overactive, it shuts down your ability to think, to plan, to make decisions. And so it's not like a light switch, it's more like a dimmer. The more emotion, the more you lose those functions. And here's the other one. There's a 4th function you lose, the ability to control your emotions. So I'll say it again. The part of the brain that is responsible for controlling your emotions can be turned off by excessive levels of emotion. It is a sadistic way that the brain is wired, but this is the reality that we have to deal with. Okay. So you have to take action early, which is why you map the pattern. You need to understand the causality so that when you begin fighting, you can actually kind of undercut the emotion rather than containing it, right? So we talked about, I've really learned to control my emotions. However, I still have a blow up day. Well, what's happening there, right? Really what's happening is it's like a pressure cooker effect where you are suppressing the emotion. You're not actually chopping it away. That's not a correction. That's a Band-Aid. When you have an understanding of the causality, then you can actually not only again, kind of contain or control the emotion in the short term, but in the long term, you can begin to chip away at it so that over time, the amount of emotion that gets triggered gets less and less and less. And eventually you get to the point where you truly are resolving the emotion so that you can experience a handful of losses. You can have a position just nosedive after being up, nearly to your target and stops you out. And then you re-enter again and it immediately stops you back out. And those situations won't cause a lot of emotion, or it won't cause enough that's going to cause you to be overwhelmed. So my strategy is more time consuming. It's more work. It's challenging at times because you have to really be honest with yourself and take some time to self-reflect and analyze and take notes. But, the alternative is chaos. and I think kind of gambling, frankly, right? You're kind of gambling with your mental and emotional state. And that's just not my style. Okay. Next question. Consistency. I'm not able to achieve that. Also, an inflated sense of ego when profitable, very low when in a drawdown. Is it that I'm trading too big? I don't know if you're trading too big. If you suspect that you are, then scale down. There's very little cost. I think by and large, traders at your all level, you want to make money fast. You want to become skilled fast. And you want to get out of whatever circumstances that you're in and become full-time, become profitable, make extra money, whatever it is. You want to achieve those things fast. And who doesn't? And so what that does is it forces you to, I think, make decisions that may not necessarily be theoretically like a risk management problem, but it might be a problem with regards to building skill. And if we think about it like building muscle, that if you are to scale up the weight too rapidly, does it mean that you're going to get hurt? No. Does it increase the risk? Yes. And when you scale up fast and put on too much size, you risk not being able to build the amount of skill that you need to be able to handle the ups and downs that the market is going to go through all the time. So this question, how do you achieve consistency? I think what you're really asking is, how do I achieve more consistency with my confidence, right? If I get an inflated sense of ego when I'm doing well and a low confidence when I'm in a drawdown, that emotional instability is really a confidence problem. And so there are individual weaknesses that probably need to be cleaned up. But I would suggest that you, like many others, are way too attached to results or P&L. And then your confidence just goes through, the ringer like a roller coaster, because that's what your results are going to do. And so to begin to detach from that is not a detachment just from results. It's trying to create a strong attachment to your process and to your execution. All right, there's a tool that I use called an A to C game analysis. And basically it just means you articulate you at your best, your A game, you at your worst, your C game, and you at your kind of average B game. And you can do this for your individual trades. And so you want to be grading the quality of your trade before, and I assume that, you're not as discretionary in terms of, exits. There's not a lot of scaling in and scaling out. If that's the case, then, you can grade yourself at the end of the trade. But for many of you, if you are setting a stop and a target, once you enter, you can grade the quality of the trade before the trade even closes. So, what I'll have a lot of my clients will do, literally they'll either print out, a screenshot of the chart at entry, or they'll look at it, look at that screenshot on another screen, so they're not kind of influenced by the price action. And they will actually give themselves a grade of that trade. And then at that point, right, we're not saying that the result is irrelevant. I'm not saying that results don't matter, but I am saying that in the short term, you need to be measuring yourself far more on the quality of your execution and less on the P&L, and that will help to stabilize your confidence. I saw a question come in that says, does Jared trade? No, I do not. I mean, I'm certainly been well versed in the markets for over 30 years, but I know the amount of skill that it takes to become a skilled trader, just as it does to become a skilled poker player, an esport athlete, or whatever. The game that I'm most competitive with is my coaching and golf. So, all right, next question. How to maintain positive focus while in a drawdown? Kind of answer that question in the same way, because I think the positivity, I don't want you to just to be positive for the sake of being positive, right? It can kind of leave you a little bit vulnerable, because if you're in a drawdown and you're trading really, really well, right, based on the parameters that I just defined, right, you can quantify the quality of your trades, then you have reason to be positive. But if you're trading poorly, then I don't want you to just keep kind of filling your head with aspirational, like, all right, today's a new day, today I'm going to get it. That's just a bunch of BS, and it's going to bite you. Okay. I want you to be pragmatic. I want you to be sober. I want you to be realistic. I don't want you to be positive just for the sake of being positive. Next question. Whether I'm up or down, I frequently struggle to call it a day. Even if I close my charts, I still feel a need to constantly monitor the market. Do you have any advice to give regarding walking away and staying away? Is it simply an issue of discipline? I'm not sure it's even an issue of discipline, right? I think when we look at the causality of that, there's got to be some emotion there. The itchiness. It could just be like excessive motivation, which is not inherently a problem. But if it's out of control, which this is what it seems like it is, then it tells me that your goals are a little misaligned. There's some conflict going on, right? That there's some urgency with which you think you want to achieve them. So, right, your goals might be realistic, but again, the time frame, right? You feel like it has to happen now, and the fact that it has to happen now, doesn't allow you to peel it away. Sometimes it is just the adrenaline, right? And if you have ever had a gambling problem, or you veer towards adrenaline type sports or activities, that kind of raptureness with those activities, like the adrenaline that kind of fuels them, can kind of keep you, kind of constantly monitoring the market. So, you got to do some work, going through the program that I mentioned earlier, right? Like really getting into the root of what's causing that excessiveness. All right, I've seen a few questions come in, so I'm going to get to a couple questions that have come in, and then I will get back to the ones that came in before. Is it important to actually find the source of a trigger, like why we feel the need to do this, etc.? I don't think that you can reliably solve a problem that you don't understand. You can solve a problem that you don't understand, but you kind of have to get lucky. And so the process for digging at and understanding the source of a trigger, I'm not going to go through the whole process because I don't want to make this kind of too complicated, but the basic idea is, if you just ask yourself the why question, right? Why is it that I hate to lose? Why is it that I feel a need to be in the market at all times? Why is it that when I see other traders making money, I feel the need to get into positions quickly, even though there isn't a setup on my system, right? If you just start asking those why questions, it really does change the nature with which you are problem solving, because so many of you, again, just sort of see the mistakes that you're making, and you think they're dumb. You think you're dumb. You can't, it's like, it's irrational. It's illogical. It doesn't make any sense to you. But I promise you, right, 99.9% of the issues that I deal with, there's no irrationality. It's what feels irrational is just an indication of a lack of knowledge, right? Once you understand why you're doing something, it's not irrational. It's just wrong. And that's fine. You deal with the problem, right? It's wrong to expect to make money every day. It's wrong to expect perfection of yourself, right? And so those flaws are common. Lots of people make them across lots of performance environments, but they're not irrational. And that irrationality if you feel like you're being irrational, it just makes things way worse. You kind of snowball on yourself, and the emotions get more intense. And then there's like a hangover of something I call accumulated emotion, right? You tilt today, then, you go do whatever. You wake up the next day, you kind of feel refreshed, but there's still a little bit of anger hanging over from the day before. It's literally like an emotional hangover. And so now today, less emotion is going to be required before you tilt again. And then tomorrow the same happens. So when you think your problems are irrational, that emotion just builds and builds and builds until you just got to say, all right, forget it. I'm taking 2 weeks off, which is not ideal, right? So changing the nature with which you problem solve is a fast way to, I think, start to undercut emotions. How can traders develop discipline and stick to their trading plan even when emotions are high? I don't know that you can, truthfully. So the way I structure the trading book and the way that I look at discipline in general is that when you have an emotional problem or when your emotions are high, you can't call that a violation of discipline, right? Any of the mistakes that you make, the trading rules that you're breaking, the not adhering to your daily loss limit, entering positions, with way too much size, right? If you're emotional, it's not a discipline problem that you're violating those rules, right? You've lost control. So trying to control yourself in the face of all that emotion is going to create that pressure cooker-like effect, and you're going to pop, right? And so you might be able to control yourself for a few days, but then the big blow up is going to happen. So I think what we want to do first is get an understanding of our emotions, or at least an identification of the early warning signs, right? And then you're either taking action then, or you're using that understanding to reduce your emotionality, and then you can work to create discipline. But if you're working to create discipline without an understanding of the causality, you are going to, I think, really struggle to kind of gain command of your mental and emotional state. All right, keep the questions coming. It's good stuff. I'm going to get back to a few that came in earlier. How to stay focused? Kind of a basic question here, but so I think when we're dealing with focus issues, we're going to look at it from a couple of different angles. Number one, you can analyze it just like any other problem, right? Let's find the situations where you're most likely to lose focus. It could be a time period, right? Some people can focus for 30 minutes, an hour, hour and a half, 2 hours, right? But at some point, that focus is going to fade. And so if it's a time period, then you want to start taking action before that hits, right? If you become fatigued enough to lose focus, then you're going to be kind of lacking some energy to be able to recover. And so I want you to take action before that fatigue really starts to kind of weigh you down. So that's one. Another thing is you can look at your goals. So sometimes, in a really choppy sideways market that doesn't really have anything going on, if you have goals that are very kind of monetary driven, especially in the short term, then that's going to force you to focus on making money versus force you to focus on making good decisions and maybe sitting on your hands or taking breaks or structuring things so that you don't have to rely on your attention for as long as you do. Especially now, if there's a lot of things going on, it's oftentimes a lot of times easier because the market's kind of got your mind fully engaged. So again, I think any time that we're dealing with a focus issue, you want to look at goals, you want to look at time period, you want to look at the things that are causing that lack of focus. How do I develop patience during very slow markets like the current ES market? I mean, I think whenever I hear somebody talk about developing patience, that usually means that they're impatient. And so, it's tricky. It kind of goes to what I was just mentioning, where if your goals are misaligned, you're gonna create an extra level of urgency to do things that are not properly aligned with the current market conditions. So I think you have to be really honest with yourself at the start of the trading day that if there is nothing happening, then your job is not to trade, right? While you might be a trader, being a trader doesn't mean that you have to be in a position at all times. I mean, I'm sure you've heard that many times before. But if there's some reason why that is not like kind of being accepted, there's a couple other questions in here that relate to this idea. If you can't accept an idea, for example, FOMO, right? Of course I accept that, or of course I understand that there are always going to be more opportunities, but in the moment, it feels like I have to capture this one, right? So that lack of acceptance of that truth is not evidence of you being stupid. Okay? So many people say that. It's just evidence that there's something blocking you. It's like trying to throw a piece of paper at a fan, right? It's just going to get spit out. So again, we have to ask that why question. Why does it make sense that I would not accept in this moment that there's another position? Why is it that I would not accept that current market conditions might only give me one trade today, right? And once you get that answer, that's what you're actually beginning to correct. Okay. We'll get to a couple other questions that have come in. Sometimes I have trouble with chasing down entries. Today I did a lot better. I've noticed that it's something I can control, but sometimes I get compulsive. Is it better to just turn off the charts, or is there a way I can control it better? So same principles apply. Identify the early kind of warning signs of that chasing. Understand why it is that you are chasing it. If you want to post more about, kind of why you think you get compulsive, it's not like the compulsiveness is not the answer to the why. The compulsiveness is a further description of what you're saying is chasing. Maybe the compulsiveness is either making money, getting into a good trade, feeling a sense of accomplishment because you are trading, trying to make up for losses the previous day, trying to feel like you're continuing to move along in your goals, and not even just monetary, just make it feel like you're making progress. That understanding is how you're going to kind of undercut it, because it really is wild. I mean, maybe you all have experienced this on a personal level. Let's say you've been in an argument with a friend, a spouse, a partner, whomever, and like once you kind of come to an understanding, like all that frustration and tension just goes away. That's what we're after here, right? So many of you are just continuing to fight yourself because you don't understand like what is actually happening. You're not understanding the full nature of the problem. But if you ask that why question, you take a step back and you ask, all right, why is this happening? Well, what is really going on here? And frankly, sometimes in an argument with another person, that question actually helps. Okay. How do I prevent greed and overtrading on a negative P&L day? Okay, so if there's greed involved, that means you are trying to make money to make up for those losses. And on the surface, that makes sense, right? You want to get back to even, but you're effectively kind of throwing, good money after bad money. And so why would you do that? Okay. So it could be because having a negative P&L day feels awful and you hate the feeling of losing. Okay. Reasonable, common. Now, how do you correct it? Well, we can sometimes correct it by amplifying the feeling of those winning days, because sometimes those winning days are expected and kind of not really that enjoyable, right? The losing really weighs down on you a lot more. So that's one. Another thing could be that, losing hurts because you're really trying to prove yourself. And, they just kind of stick in your mind for a lot longer. It's harder for you to kind of go on with the day. So what can you do? You can take some notes down at the end, talk about how well you traded or mistakes that you actually made, and, give yourself kind of an actual break at the end of the day. Look, it's not helpful to carry this stuff around, indefinitely, right? Writing is a great tool at the end of a trading day to be able to just kind of put things back down and be able to go on and move on. Sometimes the pain lasts for like a minute. I mean, I've had clients who have done exactly this, right? They'll do everything to avoid 60 seconds of pain because they don't realize that it's actually only 60 seconds of pain until they force themselves to just kind of sit with it, just feel it for a little bit. Not negative. You're competitive. You want to win. Great. just absorb the hit like a boxer taking a punch, right? But if you are not willing to truly take the punch and then just start trying to throw haymakers, right, you're going to get knocked out, which is what happens. So sometimes you just got to absorb the punch and condition yourself to that. Can I answer this next question? But I'm actually going to add one more. So how to develop healthy habits to stop overtrading and revenge trading. The other piece of revenge trading that is really important, and sometimes this is true of overtrading, right, is that there's a confidence component involved. Losing, it hurts because you're actually like losing confidence too. So for some, it's not even the loss of capital that matters more, it's the loss of confidence. And again, if you have that record of the accuracy of that trade or the trades throughout the day, and you can see, took 5 trades today, 4 of them were solid A trades. The other one was a B trade, but it wasn't the cause of the losses. Like, all right, look, you can end the day knowing that you did what you could. Can you do better? Of course. Could you have done better today other than that one trade? The answer is no, right? It's so easy to get kind of critical of ourselves because you may not be exactly where you want to be, especially for people that have been successful elsewhere. This is not your first enterprise. You've come from business, you come from other walks of life where you've been successful. It is hard to be an infant again and just learning to walk. And it's so easy to be critical of yourself and to feel like you're falling short because you know how much better you could be. But if you're doing everything you could today, which is why that A to C game analysis is so important, because it does help you to be more level-headed and really sober about where you're at and not pushing too hard. If you can have that kind of perspective, right, it really will allow you to, just learn to walk here and be a bumbling toddler for a little while. There's nothing wrong with that. That's where you're at. But, imagine a parent actually yelling at a toddler for falling when they're learning to walk. I mean, some of you are doing that to yourselves, and it really is slowing up your progress and imprinting things that are going to damage you, for quite a while. All right. Jared, in your system, you mentioned the rock versus symptoms. How would one know if they have indeed discerned what the rock is and not be fooled that the problem is the symptom? Very good question. In essence, constantly being fooled and looking at the wrong thing and not getting the root, being tricked by the mind, so to speak. If your mind is trying to trick you, how can one rely on the mind to solve the issues? Figured you would have tips. Yeah. So the mind is not trying to trick you, right? The mind is just really efficient. And when there are these rocks in the back of your mind, they fuel a lot of your decision-making and a lot of your actions. So how do you know when you've actually found a rock and are working on it? It's because your emotional state changes in real time when you're actually correcting it, right? If you are kind of battling up against it, nothing's really changing. You haven't found the correction yet. Now, that happens like on one day. We're not going to know that for sure. But, if you give yourself a solid week, 2 weeks max, nothing's changed, then you for sure do not understand the root yet. You don't understand the rock. So, kind of do a little bit more digging. But the hope is, and this is for sure what happens with a lot of my clients, in that time period where you continue to struggle, right? You think you have the problem. You think you have an understanding of the rock and have the correction in mind. You're applying it, and just like nothing's really changing. Most often, if you are taking notes down, you will understand far more about the scope of the problem than you would have beforehand. Because if you're applying a correction, it means you've mapped your pattern. It means you're seeing what's happening in real time. And if you're seeing what's happening in real time and it's not really working, your mind is now focused on this in a different way. You are trying to understand what is going on here, not just battling up against what is happening, right? I'll say that again. You are trying to understand what is happening, not just battling. If you are just battling, right, what's going to happen? There's no understanding that's going to be gained here. So what happens is, that week of battling doesn't lead anywhere productive, except that now you have all these puzzle pieces, right? So you take a step back at the weekend, you look at it, you're like, all right, now what do I think is going on here? And maybe you won't get an answer then. But my guess is that you will know more and you'll at least have a better understanding. And then eventually you're going to crack through it. It's just rare, right, that somebody's not able to figure out the root if they try hard enough and long enough. But, persistence is sometimes the thing that's lacking, and people want easy answers, especially in mental and emotional space, but like the easy answers here would literally be the equivalent of going to the gym for a day and then walking out expecting, to be jacked a couple of days later. Like, right, I understand what's going on now. I should have muscles, right? I understand what's going on here now. I should be able to be in command and control of all of these problems. Like, no. Mapping your pattern, right? Understanding your problem, it's just the beginning. Just the beginning, right? You can't read my book and expect to have a perfect mental game, just like you can't read a book on physical fitness and expect to have it give you muscles. You've got to put in the work and the time and the effort. But like, a lot of people want things easily. They want them handed to them, but there is no easy way. My job, I think, is to make things easier, to save you a lot of time and pain and suffering and struggle. But, it's not gonna, I can't eat for you. I can't drink water for you. And I can't give you answers other than provide you the path for you to not only either figure out your own answers or to develop your own muscles. Usually takes me about 15 to 20 minutes of trading before I can really zone in and focus. How can I accomplish this from the start? You just need a better process from the start. And so why don't you look at, 5 or 10 trades that you've taken in the last few days and go through your decision-making process. Maybe even watch replays. I mean, you could either look at, other charts, pre-market charts, just to get your mind activated thinking, right? What would you do if you're an athlete, right? You'd be warming up your body. So warm up your mind, warm up your decision-making process. All right. How do I develop a consistent mindset to not to trade, believing, assuming, or even thinking what price will do next to enter a trade? So basically the question is like, I have this flaw that I believe I know what is going to happen with price. That's the rock. You've identified that. So now the question is like, why would you believe that? Okay. How do I develop a constant mindset? This isn't, so I don't love the term mindset because it kind of implies like you're just going to adopt this persona and this ethos, and then it is going to allow you to trade properly. Mental game, I think, implies the learnings, the ups and downs, the work, the refinement, the polishing that's really required, right? Game, strategizing, evolution, process. Okay. So yeah, write it down on a piece of paper that tells you what is true. I cannot predict the future. I do not know what's going to happen. Write it down and just create a drumbeat in your mind of that throughout the day. Now, if, again, as I just mentioned, after a week, it's not changing, right? What kind of your decision making and what's happening, then it tells you that there's a deeper reason as to why you want that power. And for some, it's a confidence issue, right? They want to believe that they could be that good. Is this a conscious thing that you're aware of day to day? No, of course not. Right? We've got these kind of programs running in the back of our minds that, just kind of come out at weird times like this. And they don't come out other areas of life because sometimes trading just amplifies problems in a way that life does not. So yeah, that's the problem. You want to be a superhero and you're not. So now you have to learn to accept that or understand who you are and what you're truly capable of. I have a tendency to not accept losses, which cause more losses. How can I come out of that mentality? So again, that's what I kind of mentioned earlier, right? Like you gotta fully understand why it is that you can't accept a loss. And that goes to things that I mentioned earlier today. I find myself trading not to lose, thereby putting stops way too tight. How do I relax, breathe, and let my trade work? Well, if it was just that simple. I think what we're dealing with here is fear, right? And the relaxing breathing tells me that the nerves are really kind of amped up. So there's a lot of things that can be kind of at play here, right? The most basic one is that the inherent nature of trading is so intense that you're not kind of fully appreciating that intensity. You're not used to your body and your mind feeling different. And that difference is telling you to kind of protect. When that protection, right? You're protecting yourself from not losing is protecting yourself from not succeeding also. So sometimes you have to just like throw yourself off the diving board and understand that you would rather belly flop than stay stuck on the diving board, right? You'd rather fail trying, doing everything you possibly could to succeed, rather than preventing yourself from having any opportunity to do that. I mean, that's kind of a basic parameter here, but it also could be, right, the fear of losing, the fear of mistakes, the fear of failure, the fear of success. You know, so you have to kind of dig through that a little bit more to see what's really behind the fear. How do I work through FOMO, which causes me to close out trades without allowing them to run to targets, basically taking smaller wins for fear of the market turning? I don't know that that's FOMO. I think that's maybe fear of losing unrealized gains. And so in a way, the advice I just gave applies here too, right? Would you rather lock up a small amount of profit, knowing that if you continue to do that, you are basically locking up your failure, right? Because you're just not going to be able to scale up if you're not allowing your system to work properly, right? I mean, imagine that a business requires 10 employees to run properly, and you have 5. The business is going to fail. It doesn't matter how good the operation could be. The operation is running at 50% capacity. If your system, your profit driving engine, is operating at 50% capacity, it's not going to thrive. It's not built that way. So you're building a business. You need to allow it to run properly. So again, same questions can apply, right? Why is that fear there? And I think for a lot of you, something I haven't mentioned yet is it's just very easy to get prematurely attached to profit that is unrealized. And I think that is just a very basic performance flaw, right? It's the Atlanta Falcons being up by 28 points in the third quarter of the Super Bowl, and they start protecting rather than understanding that they could still lose this game. If they truly knew that they could lose this game, I think they end up winning that game. But they're protecting, thinking that that's the way to win, and it does the opposite. Okay. There are other questions that are coming in. I will get to them too, because we're gonna have about 15 minutes left. Right. How to stop trading when it's too much fun, making money, music going, in my zone, and the market changes, but I don't want to stop. Please don't tell me to put a rubber band on my wrist. Yeah, no, the rubber band on your wrist is a joke. I'm not sure I fully understand why you're stopping. Okay, so the market changes, but does that mean you have to stop trading, or does it just mean that you have to change your style a little bit? I mean, be in your zone and have fun, but maybe it's just that you're not adapting to the change in the market, and you're continuing to now force your strategy style into positions that the market is not, right? I heard somebody say the other day that great trading is like treating the market like it's a salsa partner, and you really do have to let them lead you, not the other way around. Right. Why do I move my stops farther away, even though I know I lose more? I would suggest that's either a sign of revenge or a sign of desperation, which would be a confidence issue. But you're basically trying to prevent yourself from losing by moving your stop. Because if your stop gets hit, then you actually are realizing that loss. But you move your stop farther away because you want to avoid the loss. But that's obviously not true, given that you are losing more. So I think the question is, if it's a confidence issue, what is kind of at the causality? I'll give you an example. Maybe some of you thought I was a little kind of off, saying that expecting perfection is wrong, right? You expect perfection of yourself. Why would that be bad? And I'm not saying that it is inherently bad, but I am saying that expecting perfection can cause significant damage to confidence. Great for motivation, right? Having high expectations of yourself, super motivating. But they cause damage to your confidence because your scale for how you measure yourself, measure your performance, measure your learning is off, right? If you meet your expectations, you get zero confidence, because why would you get credit for something you're supposed to do, right? It's only when you exceed your incredibly high expectations you get any credit for it, and that's not going to happen very often. Most of the time you end up kind of falling short and failing. So what happens is over time, you just feel like a failure deep inside. There's like a hole in you. And what does that hole do? It looks for profit to kind of reconcile that.
Can I ask you something on this, Jared?
Yeah, of course.
I've always been kind of under the impression or under the belief that most people that come into trading are hardwired to try and not take losses, and at the same time wired to take profits. So we end up avoiding losses by waiting or moving our stops, because we're just hoping that the market's going to come back and make us whole again. And on the other side, when we have trouble holding on to winning trades until they come to fruition, or looking for opportunities that are asymmetrical, like smaller risk for bigger rewards, it's extremely difficult to kind of get that into the wiring of the brain, because we're always trying to not take losses and we're always trying to make money. So we have this tendency to create bigger losses till we get to a point of pain where we have to get out, and we lose $500 on a trade and we get a $50 winner and we're like, oh my God, I got to take it. And I think it's just an inherent thing in most human beings. I haven't met anybody in trading that got that from the beginning.
I think it's because life has such, like, there's obviously a lot of luck and variance in life, but it tends not to be as compressed in trading. And poker is very similar too. The inability to kind of understand the nature of this game is a big reason for why that exists. And that's why, a lot of some of the hedge funds that I worked with hired poker players, because they didn't have to go through the learning curve of understanding, the uncertainty in the short term, and certainly the variability in results as well. Like, it was kind of understood and implicit. So yeah, I mean, while many of you may know and understand that consciously, do you know it like it's the back of your hand? And if that answer is no, then you do need to read, Black Swan, or the other one, Fooled by Randomness, or other things that have been written in trading. I mean, look, Trading in the Zone talks about this a lot. I would read sections of that book and just make it part of your daily diet, so that you are kind of going into the trading day with a clear mind of, like, this is how the game is played. These are the rules and the parameters by which it operates. And so the avoidance of loss, it starts to kind of change, in your mind, right? We want the execution. That's how you are defining what success and failure looks like, not the short-term, profitability, because you can't, I think, kind of solve for that game, if you're not properly measuring yourself, and the false feedback that you get from the results in trading then really starts to dictate your actions in a way that's not really accurate. It creates far more chaos than it does. Okay. I agree that we are not superheroes. That said, we have to weigh probability of price movement in order to make trading decisions. When we get into is rewarding our decisions, we have to remember that we are not super, but at the same time, notice our edge. That can be difficult. Any comments? I mean, I'm not saying that, like, you all have the potential to be great, but when you are expecting of yourself, when you are unable to be pragmatic about seeing where your shortcomings are today, then you're kind of misaligned. Your expectations are kind of out of line with, kind of present day reality, and problems are going to emerge, as a result of that. So, yeah, I mean, sometimes that flow, you might not be actually making the best decisions either. I mean, the false feedback can go in two directions, right? You can be making money and feeling like you're in the flow. I mean, some of my clients, like they just like love when the market is really active and it feels like they're in the zone. They feel like they're in flow. They're actually not trading that great. There's a lot of activity. They're making money, but it's not sustainable. B, like they would. There's a lot of things they would do differently. When they actually take a step back and look at the trippies. So that's why I say, like, when you have an A to C game analysis, you have an objective measuring stick that you can use to grade your performance. You can grade your trades, and that's something that you can rely on. Now, again, can those parameters change? Of course, and we want them to. We want that growth to occur, right? We want your worst trades to start to really level up and move forward. But like we need something more objective, and when you have that, it kind of does ground you, gives you something to kind of hold on to in the swirling storm of chaos that is short-term results in trading. How do you keep your mind sane in all of that? Well, that A to C game really helps to do it. And the other thing is that what it also does is it helps to guide your development. Right. So many of you might be in a drawdown, and what do? You start looking for new systems. You look for new trading strategies, and all that does is create more chaos. Even if you get something that works short term, like, is it going to be reliable? Are you building confidence on real skill, or are you just kind of buying short term results? And so when you have a clear understanding of what your weaknesses are, well, as long as you're continuing to hammer away at those and correct those, you're organically improving without having to kind of go outside and externally look for something to fix, kind of your current results. On the same token, when you see what your A game looks like, it allows you to kind of understand what could help to make it better. And you can go out and look at other, styles and strategies, et cetera, and feel like it's a fit or not, right? Rather than it being somewhat random and being too deferential to somebody else, who may know a lot more than you do and have a lot more experience, but may not really be a fit for you, right? You need to create your own fingerprint that you're going to bring into the market, right? Your own style and persona. There's so much to trading that is, is that, and that's an element of psychology that I really don't get into, which is, understanding your personality and how your personality, kind of properly lines up with different strategies, timeframes, instruments. And that, but it's important to find that, and even strategies, right? It's important to find that. An A to C game analysis will kind of give you some consistency through that process. Knowing your rocks is one thing. Then what strategies do you use to address it? Let me share my screen again. So the real-time strategy. I guess I don't get into this here, but okay. So it's chapter 9. The basic premise is, it's a 4-step process. Okay. So in real time, you have to recognize, right? You have to recognize quickly and early that your pattern has been triggered. Okay. Step 1. Step 2, you want to disrupt the momentum of that pattern. Okay. So object in motion stays in motion until acted upon by an outside force. Your patterns are like an object in motion, right? There is an inevitability to where they're going to go, that unless you get lucky, have a trade work out, right? The revenge trading is just going to go. Like that is a well-worn pattern that is going to go to its inevitable outcome unless you become the outside force. So disrupting momentum is a chance to kind of disrupt that momentum of that pattern enough for you to do step 3, which is inject logic. Okay, so disrupting the momentum could be taking a deep breath, standing up, going for a walk, doing jumping jacks, something. Sometimes it could be just like writing down what's going on, right? That's often a very simple, easy, helpful way to disrupt the pattern. Now, step 3, injecting logic, is a predetermined, right? It's written down, a phrase, a statement, a word that corrects the rock, corrects the flaw, corrects the real problem. So if it is perfectionism, right? What's the correction of perfectionism? Is not lowering your expectations and not, right? The perfectionism is understanding, okay, look, my job is not to be perfect. My job is to be better. My job is to do the absolute best that I possibly can. That is the idea. So if you, let's say, take a few losses, you make a few mistakes, right? The correction might be, look, losses and mistakes are going to happen, but my job right now is to not make more of them, not to add fuel to the fire, but instead to kind of work my way out of this. And so you're applying that and really kind of forcefully trying to inject that logic into your mind to change your emotional state so you can make better decisions. The fourth step is what I call a strategic reminder. And that's basically either a list of your trading process, like the thoughts, the parameters that you're going to go through to make a trading decision or to not make one, or it's a list of the mistakes that you might commonly make. But the point is, the first three steps are about getting your emotional state stabilized. The fourth step is about making sure that you make a good trading decision. And because your emotions are stable does not mean that you're going to. And so we just want to kind of increase the probability of that occurring. And so, yeah, there's a few ways that you can do that last one. Okay, so the books that somebody was asking about, what books I was saying, Black Swan and Fooled by Randomness, both by Nassim Taleb, who is, yeah, a master when it comes to that stuff. All right, maybe time for one more. Okay, this one. How do I keep calm and not make rash decisions? I'm so convinced something is going to happen, I don't consider other possibilities. So again, that is evidence that emotions have kind of hijacked, an emotional state, or a mental state that is not able to do that, right? So you're not considering other possibilities, not because you're dumb, but because you're emotional. And so if you're emotional, then your job is to reduce that emotionality. And that's what's going to allow you to do that. All right.
All right, Jared, thank you very much. That was awesome. And thanks everyone for joining and giving your questions. I feel like I learn a lot every time here. So thanks again. I'm sure we'll be back to do something next month. Good question as well.
Oh, well, then thank you. I'm just soaking it up here. I found a couple of more rocks in my shoe while we were sitting here. And I think I actually stubbed my toe on a boulder. But I really appreciate, you being here with us, Jared. And, I keep reading through the book and reading through parts of the book. And it's really just, it's a great book. I'm enjoying it and enjoying every time we get to see you. So thank you very much.
Thanks, John. I appreciate that very much. And yeah, an honor to know that somebody that's helping you. So that's cool.
It's always, this is a journey that it's never over until you quit. And, I keep, after 31 years, getting rocks in my shoes, and it's always just it's one of the things I love about it, is because you learn so much about yourself, sometimes over and over, sometimes new things. It's just a great opportunity to profit, number one, of course, but to know about yourself and know who you are and what makes you tick. And,
that's cool. And that's the cool thing is, like, again, the system works in all these different performance arenas, but it does help personally too. One of the things I love about golf and treating this, same thing for me. I get a chance to work on my own, discipline and mental toughness. But at the same time, when I'm experiencing fear and, tension, it's like, it's not random, right? And so, like, working through that is, a chance for me to work on myself too, which makes me better.
And
father.
I don't think anything's going to help me in my golf game, but
well, especially with that attitude.
We have to see. I actually had my father-in-law was a golf pro. He taught me a little bit, but I don't get the opportunity to practice that much. So
yeah, it's tough when you can't practice.
Yeah.
We'll get you swinging that driver, Hoag, in no time.
There you go.
But anyway, thanks. Hope there's some stuff from here that you can take, apply it to your trading, apply it to life, and don't be too hard on yourself. All right, recognize some things, but don't beat yourself up.
That's one of the things I always say. Be kind to yourself and be kind to others.
If you can't, who will?
I know. Well, that about wraps it up. We'll see you guys soon. Have a wonderful rest of the day and have a great rest of the trading week. We'll see you soon.
Take care, everybody.
Thanks again, Jared.